Yo, hello guys, and welcome to this channel. In today's video, we shall be talking about how to frame directional bias. We will learn how to frame daily bias, weekly bias, and even monthly and intraday bias. And I'd like you to stick around because regardless of the type of trader that you are, whether a scalper, a day trader, or even a swing trader, the bedrock of your concept is how to frame your bias. Alright, so let's get into it. Alright, I like to start by saying that I have various ways in which I approach the market in terms of bias. But in today's video, I'll be sharing my top 3 with you guys. So pay close attention. So the first one concept we are going to be talking about is swing points. So what are swing points? Swing points are basically, this is horrible. So swing points are basically your swing highs and lows on the market, right? So I have this is a swing high, this is swing low. In other words, these are basically your higher highs and higher lows. And in this concept, there are points of interest to us. And the logic behind this is that, please pay attention carefully. The logic behind this is that price tends to move from one swing point to another. And that is because your swing highs and swing lows are liquidity levels. I repeat, price tends to move from one swing point to another. And this is because these points are liquidity levels. You would ask why, right? Say for instance, for those that trade support and resistance levels, you will be expecting that price will come here to buy back, right? And this a resistance level also, you would expect that price will come here and to sell, isn't it? So what this is telling us is that liquidity lies around this level because we're having orders here, pending buy orders are here with stop losses below. The same way at this resistance level, we're having pending sell orders here with stop losses above. Therefore, price tends to come down, collect this liquidity around this swing point. And once this liquidity is taken, the next target level is the swing high. In the same way, price comes to this resistance level, it collects liquidity for the pending orders and the stop loss is around here. Once this is done, the next target will most likely be where the swing low. Now, does that mean that for every time price approaches these levels, we begin to buy or sell? No. There are signatures we want to see price print out for us before we take a decision. But the idea here now is this. Let us assume that this is a new trading week and I am trying to prepare myself to be in alignment with the weekly direction. So what I need to do is this. By the time I open my chart, the first thing to do is to identify my swing levels. So right about here is my swing high and this is my swing low. Therefore, my task is to patiently wait for price to either come here, give me a reason to buy. Now, once I buy, remember that once we take out this level, the bias has flipped bullish. Therefore, we will keep buying until this level is taken out. So let us assume that price trades down here. After taking out the whole of this liquidity about here, it gives us a confirmation signature to buy. So we are simply going to take our buy from here and then we'll hold this buy until this level is taken out. Now, do not forget that price will tend to give you some sell setups in between. But have this in mind that whatever you get here for a sell, they are basically what? Stop hunts. Because for what we have here is already telling us that the current bias is bullish. Therefore, we want to remain bullish until this high is taken out. Therefore, for every sell you see on this price movement, you have to consider it as what? An opportunity to buy back. It is just a temporary retracement. So see it as an opportunity to keep buying until this level is taken. All right. In the same way, if price decides to come for this high first, we also want to see a signature around here to confirm to us that okay, price wants to reverse. Now, once that signature is printed, we want to keep selling until the swing low is taken. And by signature, what I mean is your lower time frame confirmation. Do not forget that in this video, our focus is not on how to get entries. We basically want to understand how to frame our bias like a pro. So we are not going to be talking about entries here, but in subsequent videos, I will teach you guys a whole lot of entries that I use personally. So that is it. You wait for price to either take out your swing high, gives you a confirmation, you join in on the sell, and you keep selling until this low is taken out. If you price takes out the swing low first and gives you a confirmation, you buy and keep buying until this high is taken out. Anything in between here is just an opportunity to buy more and not a sell signal. Okay, I think I've portrayed that a lot. So let's go to the chart and I'll give you some practical example. And mind you, this is applicable across all time frames, like I said. So whatever we do on this time frame is the same thing across all the time frames. So now look at this point. Look at what we have here. Okay, so look at this. Is this not a swing? This is a price swing. Therefore, for this day, what we are going to do is we mark out our swing high and our swing low. The next thing is for us to wait for price to either take out the swing high or take out the swing low. Right now, look at price came here first. What are we going to do? Let's say this gives us a confirmation from here. We are going to buy, and we will keep buying until this high is taken out. Notice how every pullback we had here didn't hold until we hit the final target. All right, so this is basically what the strategy is all about. This approach works like magic, and you should consider it a powerful tip I'm sharing with you guys today. All right, let's continue. Okay, again, we are having another example here. This is a swing low, and that is a swing high. Look at it. Price came, took out this swing low. What can you see? We kept buying and buying and buying until the swing high is taken. Don't worry, in the nearest time I'll teach you guys a particular trick about this same thing. I'll teach you everything you need to know, from framing the bias to entries, to setting your take profits and stop losses. But for now, let's put our focus on how to form this bias adequately. So that is another example. You can even look for more. Okay, again, look at, you have a swing low here, you have a swing high here. Look at what happens. We kept buying until that level is taken. Okay, you can also consider this one. So yeah, that is it. As you keep going, the same concept keeps repeating. Look at swing low, swing high. Price came, took out the swing low. Look at what we did. We went up. Notice how this sell could not hold. See this sell again. Notice how it could not hold. We kept buying until the target is met. You know, it is one thing to be able to frame your bias. It is another thing to know when the bias is still valid or not. Right? So once you are able to join on this trade like this, you are not supposed to take a trade on the opposite direction. Your job is to take every buy opportunity you see until the final target is met. All right. So if we go to the daily time frame, you see that the same concept applies there. The same concept. Remember, price is fractal. All right. So let me take out everything that we have here. Now on the daily time frame, what can you see? This is a swing, right? This is a swing high. Notice how price took out the swing low. We went for the high. In the same way, look at this. Look at this guy. This is a swing low, right? This is a swing high. Notice how we took out the low instantly. We went for the high. So it keeps going on and on and on and on and on. It doesn't matter the time frame. If you are a day trader, you can look out for this on the daily time frame. Look out for your swing points. Price takes out the high or the low. You go to the lower time frame and look for confirmation. Like I said, do not worry. I will make a proper video showing you how to approach the concept from being able to establish your bias to entries, to take profits and stop losses. Yeah, so that is it about this very approach. Let's move to the next. All right, so the next concept we're going to be talking about is how to frame bias using the previous daily lows and highs, or the high and low of your previous weeks, your previous weekly candle and monthly candles. Just like the same way we said, your obvious swing levels are POIs. The same way, your daily candles, your weekly candles, your monthly candles can also be used to frame bias. Why? Because the high of this previous day's candle is a liquidity point. The low of it is also a liquidity point. Again, we can also say this is like a single candle forming swing points for us. So what we want to see is this. If we have a previous daily candle closed like this, and now we want to use this candle to form our bias for the following day, what we want to see will be that price will come, take out the low, for instance, or the high. If price comes, takes out the low of this candle, once again we'll move down to the lower time frame and we'll look for confirmation. The moment the confirmation is printed, we will take this buy from here and our target will be this high. That again, I say this because the low and high of the previous daily candle are what? Liquidity points. So for any day you see something like this, you take your buy. You want to remain bullish until the high is taken. The same thing goes for the weekly candle. If on the weekly candle, in the weekly time frame, you have a candle, let's say last week's candle closed like this, right? Let's say it closes as a bearish candle. Then this week opens. This new candle opens here, and it gives us a rejection around here with lower time frame confirmation. We want to be selling until this low is taken, because once a high of a previous weekly candle is taken, confirmation given on the lower time frame, we want to keep selling until this low is taken out, because the next target is what? Is the opposing side draw on liquidity. The same thing happens, or the same thing is applicable on the monthly time frame, on the 4-hour, any time frame at all that you think of. Your high and your low of the previous candle that was printed are all liquidity points. Now it could be this high and low, or this candle we are referring to, could be formed exactly on the previous day or exactly on the previous week, or it could be highs and lows of candles that have been formed long ago, provided that they are highs and lows of a daily or a weekly candle. We can frame our bias around them. All right, So let us go to the chart and take some example. If you look around here very well, look at this. We took out the low of this candle. Where the high of it? This is the high of that candle. So that will be our take profit. By the time you flip to the lower time frame, you will see how wide this trading range is. Look at it. This kind of trade can basically set your month for you. If you carry this trade from here, for instance, we took out the low, we had this beautiful displacement. Let's say we take our trade from this block, can keep holding until the high is taken. This is a beautiful 1:4 RR trade. So all these sales we are seeing around here don't concern us. The fact that we took out a previous daily low, price has given us confirmation on the 1 hour time frame. It means that the bias for the market for this current time has flipped bullish. Therefore, we want to keep buying. Whatever sell market gives us should be what? An opportunity to keep buying. Now look at what I'm talking about. Look, you should have gotten more buy from here. Instead of you to FOMO out, to panic and close your buy position, it's just an opportunity for you to buy more. All right. So the same thing, if we go to the weekly time frame, what's happening? All right, so the same thing is applicable on the weekly time frame. For instance, look how we took out the low of this previous weekly candle. By the time we move to the lower time frame and we spot a confirmation, we are going to be buying until the high of that same candle is taken out. All right, here, look at how we took out the high of this candle. With lower time frame confirmation again, we want to be selling until the low of the same candle is taken out. The same goes on and on and on and on. Look at, we took out the low of this candle. Where is our target? Here. So for the next 3 weeks, we kept buying just by knowing that the price is coming from a particular level. We kept buying. So check all time frames. You see that the same thing keeps happening over and over again. See guys, you don't need to complicate things. The things I'm showing you right here, they are premium information that I'm giving to you for free. So embrace it with your heart and study it to make sure you understand it. Go back to all the time frames that you have. As a matter of fact, there was a time I traded just what I am teaching you now. And it got me funded. All right. I'll make a video properly again to tell you how to pick your entries from all these levels. For now, let's just get ourselves used to finding a bias. All right, guys, let's talk about the final approach to finding a bias. But before then, I want to believe that you've gained value so far. If that is true, why not take the next 5 seconds of your time to subscribe to this channel, hit the like button, and turn on post notifications for you, so that you are the first person to receive notification anytime we post new videos. So I'll give you the 5 seconds. 1, 2, 3, 4, and 5. So thank you for subscribing. Now let's continue. Now this final approach you are seeing on my chart is what I call the 3 candles approach, right? And it is based on structure. Now I'd like to take you back to the idea of a higher highs, higher low, higher highs, higher lows, and so forth. The logic behind it is that you had the first initial price movement to the upside, a retest, continuation, then you had a retest again, continuation, and so on and so forth. I need you to visualize this one candle you are seeing here as this whole move. Alright, visualize this candle as this whole move here, and this low, the low of this next candle as this retracement here, the body of it as the continuation. So that being said, what this thing is trying to tell us is that we don't need this multiple price movement. We don't need multiple candles to be able to identify a structure. Just two candles that we have here is enough to tell us whether we are flipping bullish or bearish. So on my chart, I have the previous daily candle which closed here, right? The next daily candle opened, traded below it a bit, and then closed above. Basically, it means that structure has broken again, just like you have here. Structure has broken. So on the third day, we are simply expecting that price should retest this level and continue exactly as you have here. Okay, I take it again. You had a previous daily candle that closed here, a new one opens, retrace a bit and what? Closed above it. This signifies a break of structure from here and tells us that the next daily candle should what? Continue. It should be a buy. Therefore, just like we have here, we expect to see a pullback to retest this level and then continue. So when this happens, we simply move to the lower time frame, look for our entry confirmation, take our trade and target the previous daily high as our take profit. Alright, so let's go to the charts and I'll show you what I mean. I'm currently on gold and this is happening even today. Now look at this. This was Monday's candle. It closed like this. Yesterday was Tuesday. The candle opened, traded a bit downwards and then closed above the previous daily candle. What this is telling us is that what we have a BOS here. This is a break of structure. Therefore, we expect today's candle to be what? A bullish candle as well. So we are simply going to position ourselves on the lower time frame. We are simply going to position ourselves on the lower time frame such that when price retraces into that level, we will get our entry and then we'll keep riding until that high is taken. Now look at it. If I move down to the 15 minutes time frame, price traded back into the level I talked about. Look at this one. This is an entry level for me. This is an entry level for me. So I could have simply taken this trade from here to my stop loss right below this level and I'll target yesterday's high. Look at it. What can you see? It's a beautiful 13-hour trade. That's insane, guys. That's insane, guys. The same thing is applicable across all time frames. If we check the daily time frame again, if we go to the weekly time frame, gold has been pretty much bullish. Okay, look at how we took out this previous weekly low. If we had something like this, we go to the lower time frame and we get our confirmation. Where will be our target? The high of this candle that was taken becomes what? To take profit. On and on and on. The thing keeps happening like that. Look at everywhere. Look at this. We took out the low of this candle. If we took this trade from here, we keep holding on till that high is taken. So guys, this is how you frame your bias. I have given you the 3 most powerful ways to frame your bias in this market, and I encourage you to lock in, practice as much as you can, and make yourself fortune from it. So this will be the end of this video today. Don't forget to like and subscribe to the channel, and I'll catch you on the next one. Bye.